Guys, well done. How you doing? So I'm gonna be showing you how I get market bias and market direction. So one of the most important things in trading that many people neglect is not entry model. It's actually how to enter the trade and actually spot these trades. Now, as a 4-year trader and um, consistently failing, current still in the process of passing my prop firm, I can clearly tell you that direction is the most important, more than direction, rather more than entry model. So, if you have not subscribed to my channel, subscribe, hit the bell icon, and get updated. Soon, I'm going to be doing a vlog on my prop firm and all that, so you don't want to miss it. So I'm going to be showing you how I mark trades and actually pick the right direction, and it's actually very simple. It doesn't take you a long time. Now, some people normally we know how direction works. Some people do trend lines. They use trend lines to get the market direction. Some use Fibonacci. They use Fibonacci to get the market direction, discounted and premium pricing. Some people use other block. They use present as a discounted a demand zone or a supply zone. But me, I went back to the old school. Now it's you have to the essence of all this things. I'm not trying to tell you mine is perfect. Everybody has their own way of spotting trades and looking for market direction. But from what I've observed, I understood that the easiest way is actually candlesticks. The easiest way is daily movement and daily candle. So how I mark my trade, you can actually do this on the weekly. You can actually do it on the monthly. On the monthly, you can. It depends on you. But me, I do it on the daily. So what I do, I mark out the daily high, daily low. Let's go to past records. And if you observe this thing clearly, very clearly and intuitively, you will start observing something that price does obey that direction throughout the day. If price breaks to the upside, it obeys it throughout the day. For instance, look at this. Broke here, broke this up here. I'm looking at this up here, this point here, where the blue stuff is. You can see it broke it. It maintained it throughout the day. Broke it, maintained it throughout the day. Broke it, maintained it throughout the day. Now, these are severe cases. Now, this market direction is a bit 90%. It gives you a 90% win rate because we can have these kinds of things when market engulfs. Can you see that market engulfed this candle? You get so, but the remaining 10% is just for errors and how the market moves. You can't really be perfect. Now, you can see this, it broke to the low. Throughout that day, it was low. You understand? So this, let's go down here, broke the low here, broke the low here, broke the low here, broke the low here. You can even check past records. Let's go to the other past records. Broke high here, broke high here. Look at the rare cases that I told you about. Here, take out the high, take out the low, but eventually broke this high here, push to the upside, broke this high here, broke this high here, broke this high, broke this low here. So it all depends on your entry models, how you enter the trade. But I've noticed most 90% of the time you don't even need to think too much. And also, ICT actually said this in one of his mentorship videos that many people neglected. ICT can actually teach you so many things, but the nugget, the most important thing is inside one very short 2-minute speech. That is the crazy thing about ICT. You can talk so many nonsense, but at the end of the day, just put it in just one place. So this is how I get my market direction. And you can actually use it for all asset class. This is just on good. This is how I market on good because I trade only good. All right. So go into your chart, do this consistently, and bet it together with your entry model. And I promise you, I think you'll actually find direction a little bit much easier. All right. Thank you.